Hi, I'm Dan Danford. We're doing a series of podcasts called Money Made Easy for DadsDivorce.com. Typically take a question from one of our viewers and then I try to answer that. Our question today is unfortunately a little too common. I have recently been laid off from my job right at a time I was considering refinancing my home. Would I still be able to refinance my house without being currently employed? Well, that depends on a couple of different factors. For one thing, how long have you owned your house? What's the relationship between the loan balance and the market value of your home? Really kind of interesting. So many mortgage loans today are packaged by local lenders, but then sold off to other companies later on. And in order for a mortgage to be marketable, they often have to make certain ratios, like they'll look at your total income and then they'll look at the size of the payment compared to your total income. And they'll look at the value of the mortgage and compare it to the value of the house. And if you don't meet those particular income or particular ratios, then they wouldn't be able to sell that on the secondary market. So what that means is even without that income, you may still meet those criteria and you may still be able to refinance. But interestingly, the other thing to look at is there may be a lender, especially a local company, that really has no desire to sell your mortgage on the market. And if that's true, then they have more flexibility. They'd be able to look at your circumstance and decide based on the circumstance whether or not they think you can pay. One more interesting idea, and that's many mortgages today, many big mortgage companies have a streamlined process for refinancing. So you may be able to just call and ask, and they have some kind of process they can go through to lower your mortgage rate. Now, it may not be as low as you'd get if you went out and searched from place to place to place, but the big advantage is it may not require all the documentation that would be necessary to initiate a new mortgage. So that's another idea, is check with your current lender. I've seen circumstances where if the house is owned long enough and, so inflation has gone up, the value of your house has gone up, but your payment amount has stayed low, where when the family went from 2 incomes to 1 income, that 1 income was still sufficient to get a mortgage loan. So that's another thing, how much other money is available to your household if you're not working. I guess kind of the bottom line answer on all this is you probably need to talk, first call I'd make is to your current mortgage lender. I'd just explain your situation and ask them if there is a way to refinance the loan under the circumstances. If they say no or there isn't a good way to do that, then I'd shop around a little bit. And most of the people you talk to are going to be able to tell you pretty quickly whether or not they'd be able to help you refinance the mortgage. I guess I'd encourage you to do so, even without work. If you can refinance the mortgage at a lower rate, it will lower your payments, which will be good for your family. And today's rates are as low as they're ever going to be. So I guess with those 2 or 3 bits of advice, I just wish you good luck. Hope it works out for you. And if you want, drop us a line and let us know how you did on the refinance. That's it for this week. We'll talk to you next week. This is Dan Danford for DadsDivorce.com. Thanks.